Today you'll hear from a prolific and diligent Ian Ippolito, who, though he doesn't come from a real estate background, has become one of the most knowledgeable and respected players in the industry. Welcome to the National Real Estate Forum podcast, episode 227. Thank you for joining me today. I am Dr. Adam Gower, and this is the nationalrealestateforum.org, where I speak to leaders of the crowdfund real estate industry so that you can learn how to raise capital, build wealth, and earn passive income from crowdfund real estate deals. Real estate investing is inherently a high-risk occupation, not only for those engaged in developing real estate, but most particularly for those passively investing in deals. Many of the marketplace sites that you will find online pride themselves with having put in place systems that make investing easy. The time taken from landing on the site to placing an investment has been reduced to a few clicks. The reduction of friction in transaction process is the underlying thesis that drives most tech solutions to traditional trading practices, no matter what the industry. But while this is admirable and has opened up incredible opportunity to investors, prudent investing in real estate cannot be reduced to an "I agree" button. This may work for the so-called free services like Facebook or LinkedIn, but when you're using hard-earned money, it's imperative to examine everything that lies behind the "I agree" button before clicking and wiring funds. With this in mind, I'm offering some free training that examines in detail the risks involved in real estate, using an actual case study. To find out more, please go to the National Real Estate Forum website at nreforum.org and sign up for the News Digest right below the podcast player at the top of the homepage. And I'll send you more information on the free risks mitigation training and on other training as it becomes available. Of course, you'll also get access to the only News Digest exclusively focused on the crowdfund real estate industry. That's at the nationalrealestateforum.org website, nreforum.org, right below the podcast player at the top of the page. I'm delighted to introduce you today to Ian Ippolito. Ian comes from a tech background and is one of the most diligent real estate investors I've ever met. He is prolific in his blogging about the CFRE industry, is founder of the Real Estate Crowdfunding Review, and you can find links to several of his favorite blogs at the show notes to today's episode at the nationalrealestateforum.org website.
Well, Adam, so I came from the world of tech entrepreneurship. I had run a couple of companies, started some companies, some, more successful than others. I had a few failures, but over the years had built up a bunch of different companies. And in 2013, I sold a company called VWorker. It was an online marketplace. And I sold that to a company called Freelancer. And so I had a nice exit, and it was time to kind of move from being that tech entrepreneur to my new job was managing the finances for the family. And so I had to really get up to speed. I mean, I had always been in investing, as an entrepreneur, but my job was my primary thing. And so, I invested passively in a whole bunch of things, but had never really gotten down deep. So, at that time I was like, I really need to get serious. So, I took a look at my, at that time I was like, I really need to get serious. So, I took a look at my entire portfolio and just redid everything. I mean, my risk was totally off. I'd neglected a bunch of things and started looking at stocks and bonds and traditional investments. And, they were okay, but I also, wanted to branch out to other things. I wanted to branch out into peer-to-peer lending, a lot of this alternative stuff. And the peer-to-peer lending, so I was looking at Lending Club and Funding Circle, which does business loans. And that's what kind of led me to real estate crowdfunding when I discovered it. And I thought, wow, they're taking the idea of peer-to-peer lending, which is, a good one, but a lot of times is based on an asset that's not collateralized. So, you don't really have any protection. If the person defaults on the loan, they're gone. But now we're putting it in one of real estate. So if you're doing debt, it might be collateralized. Or, you've got equity, and then you've got this tangible piece of pride.
So when was that actually? Approximately when was it that you discovered real estate crowdfunding?
Real estate crowdfunding? It was, I think it was around 2013.
So really soon after the Jobs Act?
Yes. It was very fresh. And,
all right. So at that time, who were the main players at that time? How did you come across it? Because there just weren't that many, were there, Ian, in 2000?
Well, you know what? There weren't that many at the beginning, but they exploded really quickly. I mean, everyone was really excited about the idea. It was kind of like a big explosion, and then it kind of went back, and then another kind of growth spurt. But, you know, back then, there were some of the names that people are familiar with today. I'm trying to think. Back then, one of my favorite sites was Fundrise. It was Patch of Land was around back then. And a lot of these sites changed over time. You know, they changed their business models, or maybe they changed their underwriting or whatever. You know, they changed their business models, or maybe they changed their underwriting or whatever. But, you know, those were some of them that were back then.
And so what did you do then? How did you figure out that this was something that you were interested in? I understand the connection between peer-to-peer lending uncollateralized, and now suddenly you've got collateralized lending in a way. But so what was it that how did you bridge the gap into real estate? Or what was your knowledge of real estate beforehand?
That's a good question. Well, so beforehand, you know, I owned some rental properties. So I had knowledge of being like a landlord, and I had invested in a couple of passive deals, which had varying success. I had gotten into one deal right around, it was actually just before the Great Recession, actually a couple of years before. It's like around 2006. I invested passively in a syndication, and just, you know, bad timing. Didn't understand what I was getting into. Didn't understand how to evaluate what we got into. And thankfully, I didn't lose any money, but it took, I want to say, about 12 years to break even on that one. So, you know, I definitely wasn't something I wanted to repeat. So I realized when I got into this, I was going to have to do a lot more research. I was going to have to learn a lot more about, you know, what was going on, and kind of up my game.
So let me ask you a question about that deal. Tell me just a little bit in the context, like say, of crowdfunding. What was that deal about? You knew the owner, presumably, or the sponsor.
No, I actually didn't. I had read about them in the Wall Street Journal or something like that. I'd seen them somewhere. Technically, you know, and then so, yeah, I mean, you're not supposed to promote, but, you know, somehow they'd gotten an article out there, and I had done the research to look them up and figure out where they were, and I contacted them. So I don't think they were violating any laws there. So it was an investment in residential real estate. And, you know, that was their business model. And, you know, I think the minimum was pretty high. I can't remember. And, you know, I think the minimum was pretty high. I can't remember. I mean, compared to crowdfunding, you know, you might get in at 5,000 or 10,000. I mean, this was in the hundreds of thousands. So, and a beast of a PPM. I mean, it was just a huge thing. And I remember I took that to my attorney because I thought, okay, well, the thing you do is when you get these things, you need to take them to an attorney to evaluate them. So I took it to my attorney, and, you know, and this is really the important, like, I can see how difficult it is for people starting out because, you know, I don't know who to bring it to. So I asked around, you know, who's a good attorney that understands real estate, brought it to this attorney, and they took a look at it. And after charging me, you know, all the usual fees and everything, the end result was, well, if you trust this person, it's probably good to go ahead. If not, don't do it.
Don't need to read it. Just if you trust the guy, go ahead, right?
Yes.
Interesting.
Well, you know, they kind of were of the point of view of like, there's a lot of things in here that, you know, don't. And that wasn't what I was looking for. I was looking for, hey, I've evaluated 100 of these, and these terms look good. These terms don't, you know, so that was also kind of a wake-up call. I was like, you know what, I'm going to have to educate myself on this stuff. It was really hard for me to find, you know, the type of expertise that I needed to be able to do it.
For the only independent news digest focused on the crowdfund real estate industry, and for early access to exclusive CFRE training, please subscribe for free using the link on today's show notes page at the National Real Estate Forum.org website, nreforum.org/Ian.
Very interesting. Okay, so then you started to see these crowdfund sites. What were the first things that appealed to you?
I mean, everything was interesting to me, but it was kind of overwhelming because I was like, oh, well, there's these debt funds and there's equity, and, you know, and they're investing in senior housing. They're investing in apartments, and it's like equity, and, you know, and they're investing in senior housing. They're investing in apartments, and it's like, well, what's the difference? Some are value added, some are opportunistic. Like, how risky is this? And it was really difficult at the beginning to piece together, and kind of I needed to create a coherent overall portfolio strategy, and just going to the platforms and just taking it deal by deal which maybe is the way most people do it, and that was the way I was doing it, was just not working. I was like, I need to understand, what I'm getting into. Yeah, the return looks great, but how much risk am I taking? And of course, the sponsor doesn't tell you.
Okay, and then you started to evaluate deals and platforms. Is that right? And how did you come up with the idea for the crowdfunding real estate review?
Okay, so what it was I was like, okay, I'm just going to take some time now to figure out which investments I want to go through. And I thought, well, maybe a good shortcut would be start with the platforms first, find out, there's probably going to be a few that I like, there's probably going to be most of them that I don't, and that way I can kind of weed out a whole bunch to start with. And once I find a good platform, I can start digging into the deals. So that was the way, and I kind of looked at the different platforms, and there was nothing out there on the internet that would explain it, which would have been the easy way. So I was like, okay, well, I'm going to have to figure this out myself. So I, had my research assistant help me, but we basically contacted every single one of the platforms. I talked to the people involved. I interviewed other investors. I said, how was your experience on this platform? I took a look at their legal setup. If they go bankrupt, what's going to happen? So just looking at what are their fees like? How does that fee compare to the other ones? What's their structure? So I started looking at all these different things, and it was just really for myself, put it together. It took a couple of months, and I was like, okay, now I feel pretty confident. I know which ones I like and which ones I don't. And what happened is then people started asking me for it. So I had one person ask me for it, and I was like, oh, I don't. And what happened is then people started asking me for it. So I had one person ask me for it, and I was like, okay, well, here's all the information. And then I had another, and then another, and another. So pretty soon I was like, okay, this is too much. I'll just put it out on a website. And so that's kind of how it all got started. People
started asking you what you were doing?
Yes. They were like, hey, could you share? I'm looking at crowdfunding. I'm thinking of this platform. What do you think of that? After answering it a whole bunch of times, it's kind of like, it would be a lot easier just to put it out on a website.
And then you started investing as well, presumably.
Yes, and I was investing at the same time, exactly.
And so how are you beginning to decide on deals? Now, here you are having struggled to penetrate a beast of a PPM. How are you able to start to figure out all the ins and outs of real estate equity finance?
Yes, I wish I could have just gone to an attorney, and probably if I'd known the right attorney, I could have just started reading them. I read as many as I could. After you read 30 or 40, you start to see, oh, there's patterns here that are occurring over and over again, and then you kind of realize, that's a little bit different, or that's not that super great of a term, or that's pretty questionable, or on some of them, I'd be like, I'm liable for a lot more than actually the money I'm putting in, or whatever it is. It was really I just went into a whole bunch of these things and just started looking over and over again and just kind of seeing which ones I liked, which ones I didn't.
Right, so that's the PPMs. What about the mechanics of real estate itself when a developer is talking about an IRR or a preferred return or entitlements, or they're doing a value add or a ground up? How did you get behind understanding the ins and outs of real estate? You mentioned that you'd had a couple of deals before.
Yes,
but presumably the deal presumably the deals you're looking at.
Yeah, I had that, but as you were saying, it's not the same thing. I'd gotten into that passive deal. I had my own rental properties, which helped a lot. Understanding the cap rates and the net operating income, and all that sort of stuff. But still, I had to learn about the promotes, like you said, like IRR and how to do all that. I went online. I wish there was some source back then that was kind of like what you have, which is putting it all together into one place. Unfortunately, there was not anything like that. So, I kind of did it the way that I, learned to do, my stock market portfolio or my mutual funds. I just read everything that was out there. Just read everything, kind of digested it, and then came to an understanding. And then just repeating over and over again, each investment doing the same thing over and over again. Eventually, I figured it out.
So tell me, what trends have you seen on the platforms themselves, but also in the listings of that the platforms have? Does that make sense? So how have the platforms grown, and how have the types of deals that they list changed or stayed the same? What have you seen over the last?
Definitely changed. Definitely. Oh, and lots of change on both. So the platform started off, there was kind of the initial explosion where everyone was trying to get into it. and people were raising a ton of money from venture capital, and so it was an explosion of platforms. Very exciting time. Then there was kind of a period where, if you remember, there was like a scandal with Lending Club, and there was a financial accounting scandal, and maybe they did some things that were improper. And when that happened, all of a sudden the entire fintech space was no longer as desirable to investors. All of a sudden, these companies that were raising a ton of money couldn't raise their second round or their third round. So a whole bunch of companies started, either they were laying off people, massive layoffs, or they were shutting down. So there was kind of like a contraction. And then what we're kind of seeing, I think what we're seeing right now, in the last year and a half, is kind of like another expansion, but it's being done in a different way, because all that VC capital is no longer, flowing in, but what instead people are actually turning to the newer crowdfunding rules that allow the crowdfunding platforms themselves to raise funding for themselves versus for the investments. And so we're seeing like a new round of expansion to the ones that are successful in that.
Who's doing that, Ian?
Well, you've got Fundrise. You've got Ground Floor just announced that I forget how many million they were trying to raise. They supposedly have successfully raised whatever their target was, and now they're like doubling or tripling their goal. That maybe either they had trouble with the VC market, or VCs aren't the best thing for a company that is not going to just explode, and because they definitely push a company to do that. So this is kind of like a slower growth model. So and it seems like there's a lot of appetite for it. People are buying up these shares left and right. I mean, all those deals filled very quickly. So yeah, it's very interesting.
These are crowdfunding raises for the platforms themselves.
For the platform, yeah, exactly. For equity in the platform. So it's a speculative investment where it's not like a real estate deal where people are going to get income coming in on a regular basis. You're hoping for some sort of exit at the end, where maybe the platform is being sold to somebody else, or maybe it IPOs. And then at that point, then the person hopefully is going to see a return on their money.
Now, what about the kinds of deals that you've seen over the last 5 years?
Yeah.
Over the last 5 years?
Yeah, well, it's not been totally positive. The deals back then were much better. The deals were higher yielding. They were taking less risk. And as the cycle has aged, the risk has been ratcheting up. The yields have been going down. Each maybe quarter, it's been getting a little bit worse and worse. So a deal that would be considered maybe a good deal in 2018 would probably be a deal that, maybe might not be such a great deal way back then. So, there's so much money right now that's just chasing not enough deals. And, there's definitely, it has deteriorated.
So tell me actually specifically, how have the yields changed in the last 5 years? What were they like in 2013 and how are they looking now?
So a couple of examples. I'm not going to name any names. I'll just say that, for example, you could find on a particular platform at maybe 65% loan to value or less, at first position, maybe it's a residential flip or something, and that would be yielding double digits. So now, to get something conservative like that, very difficult unless it's some sort of more speculative, like some sort of huge construction project or something, and it's not going to be double digits. Most likely going to be, maybe like 9% or something like that, or 8%, and more likely even less. The other way that so there was a change just on on the debt side, and it's just that back then prices were cheaper, so because prices were cheaper, it just made all the underwriting that much easier. Prices have gone up, but we've had a really good run now. But as a result of the great performance of all those old investments, now a lot of the properties are really expensive. So it gets harder to find the good deals.
So how do you find them?
I mean, I do a bunch of things. I subscribe to all the crowdfunding sites, and I'm constantly
find them.
I mean, I do a bunch of things. I subscribe to all the crowdfunding sites, and I'm constantly having new deals come to me. In recent times, just at this age that we are in the cycle, it's not going to last forever. At some point, it's going to end, and there's going to be a downturn. And for me, what I want to be in at this stage of the cycle is I want a very experienced sponsor who's gone through a downturn and not lost money. That's what I want to see. And it's difficult to find it on the crowdfunding sites. probably 95% of the investments or more, probably even more, are not that. So I end up networking with people. I go to investor groups, people that I talk to. I ask, hey, what are you investing in? And that's where I find deals also.
So you underwrite a lot of deals. How much of your time do you spend looking at deals?
A lot of time looking, because a lot of the deals just don't work out. But I'm spending, that's my job, investment. So I spend, a good portion of my day doing that.
Right. So tell me now a little bit about the crowdfunding real estate review and what it is and how you operate there.
Okay. Yeah. So basically, I created this place where I put the ratings of the different platforms out there so everyone could see them. Once I did that, people were like, hey, well, what about the non-accredited platforms that were springing up? I was like, oh, okay. So I did a ranking of those, put that up there. And then I just started kind of like talking about the things like real estate news that would come in, and I would blog about it and say, here's my opinion about this or my opinion about that. And, that kind of grew to a following. I think people were subscribing to that. There's, I believe, maybe about 1,600 or 1,700 people who subscribe regularly. The site is getting, I can't remember the last time, but maybe like 7,000 or 8,000 visitors a month. So it's like, quite a few people are starting to come and follow. And then quite a few people are starting to come and follow. And then what happened is, I wrote something a little bit negative about one of these sites. And it actually wasn't a site. It was an investment on a site. And I felt that they were being very deceptive in their marketing. And I felt they were giving a guarantee that they couldn't give. And there's no such thing as a guarantee, really. In investing, there's always risk. So anyway, I wrote about that. And they threatened to sue me. In fact, they looked at every single address I've ever been at, and they sent their threats to it. I mean, they went all out, and they said, you need to take this down. And so I was like, well, this is a public thing that I'm doing. I'm doing it for free. I'm not making any money off of this. I'm just doing it to share it with people and because I enjoy it as a hobby. And I thought, well, I'm going to have to either I'm going to have to shut it down, or I'm going to have to find some other way to get the information out there, or do something else. And I thought, and to make sure that they're truly investors and not associated with a platform. And then that way I, and also the people themselves, can feel free to share information, whether it's positive or negative, but to share it freely. And so that's the other part of the real estate crowdfunding review. There's a private club where people are vetted, and and people are free to share both positive and negative information. I've been able to negotiate a bunch of great specials for the club where people can get in reduced minimums for these different sponsors because they want the business, and it's just a place for people to, when I find a new deal, I post it in there, and it's just something I found on the public website.
And have you found the input that you've received personally from the members of your club to be useful in your underwriting of deals?
I mean, I think every single time someone asks a question that's it's helpful, it may be something I've thought of before, but a lot of times it might be something it pushes me in deeper. It may be something I've thought of before, but a lot of times it might be something it pushes me in deeper. Or maybe at first I think, oh, that's an annoying question. And then I think about it. I'm like, no, you know what? That person really has a great point. And I dig in deeper. So yes, it's I think that kind of give and take is really important. It's an investor on their own is kind of in a little chamber, and to have other points of view, I think that's really powerful.
Have you actually had anybody uncover something that was a deal killer that you'd not found before in a deal that you posted on the membership section?
Not on one of the deals that I've been looking at, but just because usually I kind of take the lead on those. There have been some where people have found things and I was like, okay, I'm done with that one. So there definitely have been some that have done that.
The power of the crowd in a way, right? Crowd intelligence.
Yes, exactly.
In view of where we are now where do you think it's headed and where do you think the market's headed, Ian?
Good question. Well, I wish I could predict the market. I can't. But I think I can say with fair certainty that there's going to be a downturn coming up eventually. And I suspect that we're closer to the downturn than we are to the last one, to the next downturn. So, I'm kind of positioning on the real estate crowdfunding review. It really is focusing a lot on the investments I'm interested in, which are these conservative investments, sponsors who have experience through multiple cycles, have not lost investor money, or maybe they're like debt funds that are very conservatively underwritten. Maybe they're core real estate funds, which is maybe a little bit too boring for some people, but for me is like perfect for this part of the cycle. So a lot of the focus is on those kind of things, a very conservative mindset, trying to preserve principal, not trying to extend too much, and with the idea that, hey, after the downturn, maybe there's going to be principal, not trying to extend too much, and with the idea that, hey, after the downturn, maybe there's going to be some opportunities there, and to have some cash and some dry powder might be a really good thing.
So once you invest in a deal, though, you can't exit until the sponsor liquidates the asset, right?
Yes, generally, yes. I mean, some of these debt funds will have as low as like a 6-month hold period after which you can exit. But of course, just like anything else, there's always limitations. If everything went downhill, they could always cut off the withdrawals. But theoretically, yes, some of these you can get out of earlier.
So how do you keep your powder dry? Does that mean that you are restricting your active investments at the moment?
Yes, that's exactly it. I mean, I have a certain amount that I kind of allocate and that I have open to new investments. I've got a decent amount in these debt funds, which I feel, as long as everything doesn't go completely downhill, I should at least be able to withdraw some of that, which I keep it like in ladder CDs, and then just if it's kind of ready whenever I need it.
And that's to take advantage of any downturn and opportunistic deals that you might see.
Yes, exactly.
All right, Ian, have you given any thought to actually developing real estate yourself, or are you happy being a passive investor in other people's deals?
I love being a passive investor. My father-in-law is a developer, and I see how much work that is and how much expertise it requires. Maybe sometime in the future. For me right now, at this stage in the cycle, no way. Start of the next cycle, maybe? Yeah, I would definitely consider it. But for right now, no.
What are the key daily habits that you have that make you and your business successful?
Well, something that I do now that I never did before, and because I never had the time to do it before, when I was an entrepreneur, it just was go, 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 go. But something I do now is that when I wake up in the morning, I don't just jump right out of bed. I kind of sit there for a few minutes while I'm kind of in that in-between state. And I find it's very powerful, actually, to kind of focus on what I want to get done for the day. And it also, if there's any problems, they kind of come to my mind. And a lot of times I can, in that kind of very relaxed state, I can kind of come up with a solution that maybe I might not come up with, if I'm like trying to think really purposefully hard. So, I do that. You asked for 3. The other thing that I like to do, I found is good, is the idea of eating a frog, which is, I read this in a book, but basically the idea is that pick the hardest thing that is on your list and just get it done first thing in the morning. And what I found is that, because a lot of times I would put off the hard stuff, and if I eat one frog a day, it's amazing how the rest of the day just goes by really, really quickly.
I love that expression. I've never heard that before. It's really good.
Eating a frog, yeah. And then the third thing is just that, I read a lot. I mean, I in investments I read a lot, but it's just in everywhere. And I'm always taking in information. I want to understand the world and, what's going on. And it's all kind of synergistic. I might be reading, The Economist, and it's talking about some other country, but eventually it all comes back, and a lot of times I'm like, oh, you know what? I was reading an article about that, and that affects this real estate investment, or that affects that. So I think, just constantly being open to new information is really good.
All right, fantastic. Well, actually, thank you for giving me 3, but actually I had 3 different questions.
Oh, I'm sorry.
So I'm more than happy because those are all fascinating insights, actually. I think eating a frog is a stroke of genius. I'm going to start, actually. I think eating a frog is a stroke of genius. I'm going to start trying to do that every day.
Cool.
So 2 more questions. Only one part to each. Don't worry.
Gotcha. Sorry.
Okay. So what has been the hardest lesson that you have learned in real estate?
Well, hardest. I mean, I've learned some hard lessons. I mean, that first one, I was lucky to get out without losing money that I talked about earlier. Was that my hardest? Well, you know what? I think it was, because it took over a decade for me to I was losing money the whole time until it finally broke even at the end, and paying taxes too. So yeah, I think I learned an important lesson on that one, which was, if you don't understand timing, or I say, if I don't understand timing, if I don't understand fully what I'm getting into, if I don't understand the asset class, if I don't understand what's the worst scenario that could happen, then I probably shouldn't be investing in something. So that's the lesson I took away from that.
If you could give one piece of advice to somebody who has not yet invested in real estate, in crowdfunded real estate deals, but is considering investing, what would that advice be?
It's just learn as much as you can. The temptation is to look at the IRR and say, wow, that's a really high IRR. Let's compare that to my CD. Oh, that's fantastic. Let me just throw it into the highest yielding deal. And probably about a third of the people that I talk to are kind of coming from that mindset. And, things are going great now because the economy is humming. Everything is fine. But at some point, that's not going to be the case. And there's going to be a bunch of unhappy people. So I hope people take the time to learn as much as possible. Look before they leap. Understand the risks. If the person doesn't understand the downside of what could happen and really understand that, not just, ask the sponsor what could go wrong, but do a stress test on the investment and simulate the last recession on it. And wrong, but do a stress test on the investment and simulate the last recession on it and see if you like it, or if all of a sudden now, your stomach is up in your throat and you're like, whoa, that's pretty scary. So those are the things I recommend.
Ian and I share the same views in many ways about this new industry of crowdfund real estate and are equally appreciative of the risks involved. Mitigating risk drives everything I do in this space, and so if you have an interest in investing in real estate but are concerned about the exposure to risk of losing your investment, the free webinar that I've produced is for you. In it, I outline the exact methodology that I use to reduce risk. You can never eliminate it completely, and so even if you are already investing in crowdfund real estate deals or are just thinking about it, whether you're accredited or non-accredited, consider yourself sophisticated or not, please sign up for early notice of when the webinar will be ready, and I'll send you information right away. Just go to the show notes for today's episode at the nationalrealestateforum.org, exclusively focused on the crowdfund real estate industry, and I will first announce access to the webinar there. Again, that's at the nationalrealestateforum.org website, nreforum.org/Ian. My next guest is another entrepreneur in the crowdfund real estate space, Michael Episcope of Origin Investments. Michael comes out of a successful trading career in Chicago and has formed a platform where he invests not only his own money, but that of investors also. His approach to investing is similar in some way to Ian's today, except that he has adopted an active role in sourcing and developing deals on his own account that he shares with the crowd. You can subscribe to this podcast series so as to be sure not to miss the conversation with Michael and any other episodes by going to the nationalrealestateforum.org website, nreforum.org, and hitting any of the links that I've included about halfway down the homepage. Thanks for tuning in, and thank you also to Ian Ippolito for sharing your time with me today. Until next time, this is Dr. Adam Gower, signing off.